Today we're going to talk about one of the measures of inflation that is produced by the BLS, the Chained Consumer Price Index, or Chain CPI. The objective of the CPI is to measure changes in the cost of living for American consumers. To do this, we price a market basket of all the consumer goods and services purchased each month in urban areas across the country. The BLS publishes 3 official versions of the Consumer Price Index each month. You may already be familiar with what we call the CPI-U, which measures changes in the cost of living for all urban consumers, and the CPI-W, which measures changes in the cost of living for urban wage earners and clerical workers. Today, I want to focus on a relatively new measure of inflation that's been in the news a lot, the Chain CPI for all urban consumers. So, what's the difference? The Chain CPI differs from the U and W in 2 important ways. First, the weights, or relative importances, that is, the share of the consumer budget of the various consumer goods and services in the Chain CPI, are more current than the weights used for the U or the W. For example, in the CPI-U and W for 2015, the categories of goods and services that consumers buy are based on expenditure surveys conducted in 2011 and 2012. So those weights are a few years old. Consumer behavior can change a lot in just a few years. Consider telephones. In recent years, the use of landlines has fallen dramatically as cell phone use has correspondingly increased. The final Chain CPI will correspond more closely to how consumers are currently spending their money. A second difference between the Chain CPI and other CPIs is that the Chain CPI reflects how consumers respond to changes in relative prices. For example, suppose the price of beef increases this month, but the price of chicken falls. While some households may not change their buying habits as a result of this relative price change, at least some consumers will buy a little less beef and a little more chicken. The Chain CPI is unique.
Good early AM, 1:58 AM Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and as you can see, we're getting a meteorological spring, a little bit of a storm here. I'm trying to show you this the best I can. It looks weird at night, but it looks pretty cool, doesn't it? But it is snowing. It's catching it in its own little way, so I figured I would show you guys this while I can before the season ends. So let's get to the charts, ladies and gentlemen. Okay, so welcome back. I'm doing a quick update here. My son decided to wake up at like 12:30 because he fell asleep a little early. He's starting to wind back down, but I wanted to do an update while he's falling back asleep. I showed that Chain CPI the first couple minutes of that video. I'm going to show the rest of it at the end of this video. That's going to let you know how they come up with the Consumer Price Index, and especially when they put different weights to different things based on, well, you'll hear the explanation at the end, so stick through until the end so you can see it. But we have a little bit of action. XRP's up 1.30%. And I wanted to come on before I went back to bed. Well, I didn't even get to go to bed yet. I fell asleep for like an hour and a half. I knew he was going to wake up, so I went to my room and laid down at 11 or 10:30. And by the time it was like 1 o'clock, I heard him. So, you know, changed his diaper, did what I needed to do, a little bit of water. And he's laying down now, but he hasn't fallen asleep. But I looked at the charts, and I'm like, you know what? Got a little bit of time to put something together. So I wanted to share some intel for anybody who's up, or it's later in the day, late morning, late or early AM like here, almost 2 AM. But I figured the Chain CPI, if I can share stuff like that so you guys can understand what's in the U.S. Consumer Price Index and the differences between the different CPIs, like this one's the Chain CPI, so it's a really good way to break it down. So I'm really happy to be able to bring it to you guys. So all I want to show you right now is let's not get too like oh my god, because right now XRP has the 72.213 support, which it did touch, or at least came really close to touching. It didn't actually touch it. I think it missed it by, where did we get to? 72.662. So, I mean, about as close as you're going to get. That could be a sneaky W, but with no volume, guys, like it's showing, we're going to need something a lot greater than this to pull this through. When you're looking at pull-ups like this after little drop-offs, unless it's a retest of this very quick drop-off, which often happens, you're going to need some volume to pull you through here. And I believe what XRP is doing, and this is just my guess, I'm just XRP Future Millionaire. My guess is this is a bull flag, and we will pull up to maybe right here, and then probably pull down. That 75.2 is just that mid resistance, which we can delete this now because we're ranging. So once you start ranging, you delete that mid support, in my opinion. Well, and since it's my radio show, I can delete it, assuming it will delete. Okay, there we go. But yeah, that's what we're looking at. Let me pull this down for you guys so we can see a little bit easier. So, but I could see that happening. We've got a range here now of 77,469 and 72,213. So I actually feel pretty comfortable with this overlay. And if it wanted to, overachieve and come up to 77,469, I don't have a problem with it. It's just we don't have much going on for us. And if you bring this out into a bigger pattern in the 4-hour time frame, it's unfortunate, but you can see what's going on here. If we don't get any volume, we would get rejected up here. So we need to maintain some volume here in the 200-day. Like I said, there's always sneaky reversals that are placed. There's always retest. This very well could have been a liquidation, even if you look at it from a slightly bullish standard. This could have been the liquidation that could get you to retest that 44,000. I'm not saying that's going to happen because I don't personally think that that's likely, but there's a 25% chance that this ranging, and it would be dangerous to play this, but this, unless you're in it, this ranging could end up to here. But also what could end up happening though is you could do this, start ranging, get a dump down, and then get a retest, and then a further dump down. And that's kind of what I would expect in something like this. I would expect it to range. So we're going to see what happens here, but you have to pay very close attention. Just pay attention to the support resistance that you're in the area. You have this 38,915 support, and then we have 40,000. Oh, that's the one that got moved. Remember earlier when I'm like, which one got moved? But you see right here too, I'm going to show you guys a few things that are a little bit disheartening when it comes to this pattern. We can just do the 40,052 area, but we need the 39,800. We'll just do the 39.8. Okay. So right now we look at the 4-hour time frame, and the support's 38,915. We just got over 38,915. So we look at it. Well, now we're going to need to do some work. And we tried to come up and do a bullish divergence, and we came right back through to prove it was a fake out in Bitcoin. So oftentimes when this happens, this isn't just let's reline up and fire back up. A lot of times this ends up, you'll get this red line will all of a sudden start to drop straight down. Like it'll start to round down, and then it'll round around. But that could get you all the way down to here before this ever straightens back up. Like, this isn't good. Unless we can pick up volume, the likelihood of us shooting more than just like a retest here of 40,000 or 39.8 is very, very slim. I could see us getting to 42 real quick if it decided to, push up like that. But it's a hefty risk to take here because a lot of these are just going to back test, and now you're going to get 3 to 5% on the back test. Like, Casper's a prime example of what you could expect. Let's bring this down to the 30-minute time frame. Casper had a very harsh breakdown, and look, you've got off of the 582 support now, which was a few lines that I had in there and said we could travel in between here, and if we did, this is the bear scenario. I said if we got in here and got stuck, it would be the bear scenario, and that would lead us down to this area. Well, unfortunately, we got stuck in this area, and this was something that I drew on a couple separate style uptrends from farther out in the pattern of how it could meet, and that was just something I created. And long and behold, it ends up in that trading range. And I said it's more than likely going to end up in there because X marks the spot, right? And look where it ended up. Doesn't get any more clear than that, ladies and gentlemen. So that's how we were able to stay ahead of Casper, and we knew every step of the way. So now we know the resistance here. We're not going to get tricked. 605 if it even wants to come up there. But we got the 20-day that's come through to about 0.59 to 6 cents. So that's why we're having trouble here. XRP was coming up to that 75. Oh, that's why I have to have that on there. It's a mid resistance point, but it's 75.5 with XRP, or 75, somewhere in here. So that's where XRP can have problems. So I'll just keep it like that. XLM. We've got resistance at 17.8. We've got support at 17.1. But again, these bounces back, guys. All you have to do is look at the volume. The other ones weren't so great, right? XLM, pedestrian at best. You're barely even registering volume in the first, the last 3 30-minute candles, let alone this fourth one that's pushing up even harder, and it's literal no volume. So 17.8 could very well be the end of this. These are very weak push-ups. These are pedestrian bounces, as I like to call them. It gives people a little bit of hope, start seeing a little bit of green on the board. But look at it, DGB got a tiny bit more volume, but this doesn't have very much upside. You're likely going to cap in the upside with DGB. We won't even get up to 2093. We're going to get this pedestrian bounce here and then likely just cap down unless we get some volume. Make sure to hit that like button. I would really appreciate it. We got to get to 100 likes per videos. 90% of the videos get 100 likes now without me even saying anything, but see if we can get 100 likes or 200 likes. Also, subscribe to the channel if you're new or returning. And consider joining Tom's Army for $9.99 a month. You get the exclusive Telegram, and that entitles you to the classes. I do classes Tuesdays, Thursdays, Saturdays, 8 to 9 p.m. Eastern Standard Time. You don't have to be live. You can watch it after, and all I ask is for a $5 donation for my time. But you get the Telegram for free. You get the classes for free, but you do have to join Tom's Army on YouTube at $9.99 a month. Join the other 264 members, as we picked up a couple new members, and over 260 members of the Telegram. So I hope to see you guys in here. I want to thank each and every one of you as you allow me to live my dreams of not only being a teacher of technical analysis, of keeping everybody in the market-wide structure together in our community, but also being able to stay home with my kids and take care of Julie and be able to be the leader of Tom's Army. Like I always say, it's an honor and a privilege to be the general of this army. And I want to end out on this video so you guys can further understand the chained CPI.
CPI is unique among the CPIs we produce, and that it explicitly takes into account how much consumers spend on goods and services in both months. In short, since the chain CPI uses consumer spending patterns and is designed to reflect changes in actual consumer behavior, the chain CPI is designed to be a closer approximation to a cost of living index than the CPIU or the CPIW. Over time, the chain CPI tends to increase at a slightly lower rate than other measures of consumer inflation. For example, over the 12-year period from December 01 to December 13, the chain CPI rose at an average annual rate of 2.11%, compared to 2.33% for the CPIU. While we can say that the chain CPI is a better general or overall measure of changes in the cost of living, there is a limitation of the chain CPI that people should be aware of when considering which measure of consumer inflation to use. Namely, the chain CPI is subject to 4 quarterly revisions. For example, chain CPI indexes for August 2015 are initially published in September 2015, revised each of the next 4 quarters, and aren't published as final until August 2016. In contrast, when we publish the CPIU and W indexes each month, they are considered final when first issued. The final chain CPI needs both current prices and current spending patterns. While we can go to stores and collect the prices right away, it takes many months to determine how much consumers are spending on various items each month. Finally, a potential limitation of all 3 inflation measures, the CPIU, CPIW, and the chain CPI, is that they might not be the best measure of the changes in cost of living for each and every American. All 3 measures are merely averages. They measure changes in the cost of living for all urban consumers or for urban wage earners and clerical workers. Each individual family, on the other hand, has its own personal inflation rate. Indeed, these 3 CPIs may not be representative of specific individuals or individual families, or even for specific groups of people, such as senior citizens. In summary, a goal of the Bureau of Labor Statistics is to measure changes in the cost of living for consumers.